Hi, I'm Tim Sykes and I'm the Chief Executive at Proactis. Proactis is a provider of business spend management software that enables organisations to reduce costs, make efficiency gains through automation, and achieve greater control within the spend processes. We have over 1,000 customers across the private and public sectors, with over 3 million users and 2 million suppliers using the software in over 100 countries. This recording is a summary of the performance of the group for the 6-month period ended 31 January 2020, along with any material updates since the period end. Its content should be considered alongside the full interim statement and investor presentation that can be found on our website. The group's strategy is set out in detail within the interim statement. In summary, our objectives are: number 1, to return the group's spend management business to organic growth through improving customer retention and through accelerating the level of new business wins through a more focused approach to the markets that we serve. This was our target for the current financial year, and we've achieved that. Number 2, to drive adoption of existing supplier-paid products through the use of networking technologies and to roll out our new supplier-paid product, BPaid, an innovative financial solution for suppliers to get paid early. This was our target for next financial year, and our planning and execution is well underway. Our marketing, commercial and product teams have been working extremely hard to deliver to this timeframe, and this work has created an encouraging pipeline of opportunity. Number 3, to add in new modules and products over time to create additional growth opportunity. This was our target for the longer term, and at this point we are in the early stages of planning. To understand the results as reported within the income statement, we must first understand the SaaS business model that we operate. The business model has many strengths in terms of contractual security and longevity of revenue and profit, because revenues from new contracts are recognised largely in future periods. Accordingly, our income statement for this reporting period is reflecting the lower level of new business and customer retention performance of the prior year, with the consequence that both revenue and profitability have dipped against their comparative. However, the progress in the business during the period has been very encouraging, and the key indicators for future reporting periods are all pointing in the right direction. The total contract value of new business was 44% up against the prior period. Customer churn reduced by 50% against the prior period, and this has enabled us to report net growth in our annual recurring revenue, the key indicator of value in our business, for the first time in nearly 3 years. In addition, bank debt reduced through increased cash generation from our operating activities. And our progress has continued since the period end, with the cumulative total contract value of new business sold now approaching 11 million against a similar figure for the whole of last year. Our customer retention rates have continued to improve, and we have fundamentally reset our banking facility and are fully funded for our current business plan for the midterm. And we've deployed BPaid live against our own supplier base. From an operating perspective, our priority is the health and safety of our team, our customers and other stakeholders in the group. Our teams are all working from home, they are well connected and fully engaged, and there has been no disruption at all to customer service levels. In a commercial sense, the SaaS business model is robust and resilient to these kinds of issues in the short term, but we're not wholly immune. We have accelerated the frequency of our monitoring procedures, and the early indications are: new business is naturally slower, but customer retention has improved markedly. We have risk in short-term revenue where we have volume-based contracts, where projects are deferred by our customers, and on our supplier-paid tenders direct business. But we have natural cost savings in marketing, travel and expense, and in our temporarily deferred recruitment plans. These factors have enabled us to take a view that we can maintain guidance for the current financial year, but we are obviously looking at the implications should COVID-19 persist into the midterm. Proactis is a profitable and cash-generative SaaS-based B2B software company with growing annual recurring revenue in an exciting growth market. We are cognizant of the current COVID-19 influenced environment, but we have a solid and secure financial platform supporting the group's current business plan. Our customer retention levels are substantially better than prior periods and are at normalised levels, and our new business performance has improved significantly, and we are well placed to accelerate that even further. And our new product BPaid is at market and is building an encouraging pipeline. So, despite the current uncertain times, we have a positive outlook for our business, and we look forward to demonstrating further progress from here.